Welcome to The Explainer. So, what if one American company could single-handedly break the nation's total dependence on foreign countries for material that's inside literally every EV and smartphone? Today, we're diving deep into the public filings of Westwater Resources to figure out if their big plan is a brilliant investment or a really, really risky bet.
But before we get into that, let me ask you a quick question. The U.S. has to import almost 100% of a single material that's absolutely critical for the battery in whatever device you're watching this on right now. Any ideas?
Yup, it's graphite. It is the essential anode material in pretty much every lithium-ion battery on Earth. Think about it. Electric vehicles, massive grid storage. You just can't have the green energy transition without tons and tons of it. And here's the heart of the problem. You can see it right here. The global supply chain is, well, it's not very global. China produces about 77% of the world's natural graphite. Now, this isn't just a logistical headache, it's a huge strategic vulnerability. And that's exactly the problem Westwater Resources says it's here to solve. Okay, so here's how we're going to tackle this. First, we'll dig into that graphite bottleneck. Then, we'll look at Westwater's pretty ambitious plan for an American solution. After that, though, we have to pop the hood and look at the company's financials. And this is important, the warnings they give their own investors. Finally, we'll put it all together in the investment equation. So there you have it. That's the bottleneck. We're talking about a material that's critical for pretty much all modern tech, and it's almost entirely controlled by other nations. So what's the plan? How do you fix that? Well, this is where Westwater Resources steps into the picture. They're trying to build a completely domestic supply chain, right in Alabama, to be that American-made answer to a global problem. Their whole strategy really comes down to two major assets. First, there's the Kellyton graphite plant, which they're already building. That's the facility that'll turn raw graphite into the super pure stuff that batteries need. And second, there's the Coosa graphite deposit. This thing is the largest known deposit of its kind in the lower 48, and it's their long-term play to be completely self-sufficient. Now, Westwater claims its secret sauce is its tech. They actually have a U.S. patent on a purification process that's way more environmentally friendly than the industry standard, which uses some pretty harsh hydrofluoric acid. For big customers who care a lot about ESG, that could be a huge deal. So you're probably wondering, okay, that sounds great, but is anyone actually buying it? Well, according to their own filings, the answer is a resounding yes. 100% of the planned initial output from their new plant is already sold, locked in with binding contracts. That's a massive vote of confidence from the market before they've even started production. Okay, so that's the exciting story, right? The big vision. But for any investor, the story is only half the, story. The numbers have to work. So now we're going to switch gears and look at the cold, hard financial reality, pulling these numbers directly from the company's SEC filings. And the first number we see is pretty startling, 2009. That was the last time Westwater Resources actually recorded any revenue from its operations. For more than a decade, this has been a development stage company, which means it's been funding itself not by selling things, but by other means. And if we look at their bottom line, well, in fiscal year 2024, the company lost $12.7 million. Now look, losses are totally expected for a company that's in the middle of a massive construction project and isn't selling anything yet. But it really shows you the kind of cash they're burning through just to get this off the ground. And all that financial pressure leads us to two little words that pop up in their official reports. Two words that every single potential investor needs to pay very close attention to. Substantial doubt. This isn't my opinion. This is a direct quote from the company's report. It's the official language auditors have to use when they look at the books and basically say, we are not sure this company has enough cash to pay its bills for the next year. It is a major, major red flag. So what does going concern even mean? It's pretty simple, actually. It's the basic assumption in accounting that a business is going to stay in business. When an auditor issues a going concern warning, they're officially putting on the record that there is a serious risk the company might not make it without a big injection of new cash. And that going concern warning, it's not the only thing. To their credit, the company is actually very upfront in its filings about the major hurdles they're facing. So let's take a look at the risks Westwater is telling its own investors to worry about. And here it is, the biggest, most immediate problem, cash. Phase 1 of the Kellyton plant is going to cost around $245 million. They've already spent about $124 million, which means they still need to come up with over $120 million. And this is the critical part. They state right in their filings that construction is already slowed down while they search for that money. On top of that funding gap, they list a bunch of other risks. They openly say they need to raise a lot more money, and they usually do that by selling more stock, which can water down the value for current shareholders. They also warn about construction delays, cost overruns, facing off against huge global competitors, big swings in graphite prices, and, of course, their success depends on how fast people keep buying EVs.
So this all brings us to the final, crucial question, the investment equation. When you take everything we've seen from the company's own documents, how do you possibly weigh that incredible potential against some very, very real peril?
Let's just lay it all out, side by side. The bull case, the argument for them, is powerful. You've got a first-of-its-kind U.S. supply chain, the biggest graphite deposit in the country, patented green tech, and they've already sold everything from phase one. But the bear case, it's just as serious. A long, long history of losing money, that official going concern warning, a huge funding gap, and a business that stayed afloat by selling stock and taking on debt.
I know what many of you are thinking right now. Okay, that's great, but what's the price target? What's the exit strategy in 1 year or 5 years? And believe me, I get it. It's the #1 question, but it's a question we simply can't answer. Our job here is to lay out the facts from the source material so you can be more informed. Giving out price targets, well, that's investment advice. And frankly, there's nothing in their filings to even base a prediction like that on.
So we'll leave you with this one final question that really gets to the heart of the Westwater story. Is this company a high-risk, potentially high-reward bet on the future of America's energy independence? The potential upside is absolutely massive, but as the company's own filings make perfectly clear, so are the risks.